Welcome back to the last Container Bytes episode of 2025. What a year it's been. My, really is about the friends we made along the way, though, isn't it, Judah?
It's been quite a freight year. I'll give you that.
Let's start off by kind of summing up peak season 2025. How was peak season compared to what we anticipated it would be?
So in ocean, if we talk about the Trans-Pacific, it was weird, right? It was skewed and it was brief, and it was really a result of the trade war. So we had front loading ahead of expected tariffs, first in April, then announced again for August. And when there was that big pause from 145% on China to 30%, we had just a very brief but strong month or so in June, July. So it was a very weird peak season. We had very strong rates up to like I think $6,000 per container, but for a very short amount of time. So really, because of front loading, there wasn't much of a peak season for the Trans-Pacific. For Asia, Europe, there's actually stronger year-on-year volumes. And kind of a normal peak season, a little earlier than usual because of Red Sea diversions. But we had like May, June, July increases in volumes, increases in rates, then decreases in volumes and rates, which is pretty normal, but as we said early. But despite volumes being something like 8% stronger than last year, and this is also a result of the trade war of China kind of diversifying their trading partners, we had rates that were way lower. So last year they're up to, $8,000, $9,000 per container. This year they're up to around 3,000. And that's a function of capacity growth. That's been the other big story this year. Capacity has been growing even with the Red Sea absorbing capacity. Fleets have grown. There's more capacity available, so that's pushing rates lower than they otherwise would be. Air peak season, there was some skepticism that there would be much of a peak season, but we actually did see quite an increase in spot rates, especially for the Trans-Pacific, especially China, US. We saw rates go higher than they were last year, up above $8 per kilo, which is really expensive in the typical peak season period, right? Kind of October into mid-December. And it's possible that volumes are actually lower than last year because of some decrease in e-commerce, but there's been a resurgence, especially from general cargo, things like laptops and also microprocessors because of the AI growth and importance to the market. So there was really more of a rebound than I think there was, even though e-commerce maybe has decreased on the Trans-Pacific somewhat. Asia, Europe, we saw rates really kind of stable. They didn't increase as much. They weren't as high as last year. They breached $4 per kilo only briefly. Volumes were likely much stronger there as well, like we saw in ocean, but there's been a lot of capacity added to that market. That's probably kept rates more level, even though the demand is probably strongest there.
Yeah, I'm curious, of all those, which really surprised you the most? Like, what was the biggest surprise of peak season?
Air cargo, I think the surprise was how not so volatile rates have been. So there's been big shifts in volumes, right? There were dramatic drops, especially when de minimis was first canceled, and big increases, like continuing to be year-on-year double-digit increases for Asia, Europe. But we saw rates really rather stable, and that was a surprise. I would have expected big drops in demand to see drops in rates as well, and big increases in rates. But we haven't really seen that because carriers have been really agile in shifting capacity around, which I think was to me, at least the speed of it was really surprising.
What are you expecting from Q1 2026 when it comes to rates and capacity?
Last year was really skewed because of the trade war. Going into this year, there's more stability in terms of the trade war. In other words, there are higher tariffs for most, countries into the going exporting to the US than there were last year, but at least they're set. And at least they are, at least stable, for example, for China through November 2026. So that's a big difference. If there isn't these expectations of starts of, impositions of tariffs and removal of tariffs, there's no need for front loading. So I think we'll see seasonality, and that means that we'll see an increase in rates ahead of Lunar New Year, which we're already seeing, certainly for Asia, Europe, and possibly for Trans-Pacific. And then the typical freight year, decrease after that, and then increases as we get into the peak season months in the summer. Rate wise, we might be seeing lower year on year, which wouldn't surprise me because of, again, fleets are continuing to grow and carriers are going to have a challenge in terms of capacity management.
Awesome. I mean, maybe the two biggest wild cards that I can think of is Olympic curling. I'm really looking forward to that in a couple of weeks. But I guess on top of that, what happens with the tariffs? What happens with overcapacity? Any kind of guesses on where that'll take ocean freight pricing over the course of this year?
Yeah, so of course tariffs are the wild card, and anything could happen. They're very hard to predict. At the moment, it seems like there is, more stability, as we said before. But of course, the Supreme Court still hasn't issued its ruling in terms of whether EPA tariffs were legal or not. If that happens, are they just going to go away, or is the White House going to use this as kind of an off ramp from tariffs that are contributing to higher costs of living? Or are they going to replace them with other modes? That's obviously a big wild card. And if they're removed in anticipation that they're going to come back, then that could trigger front loading again. So that's certainly a wild card. In terms of capacity, it's not really a wild card. It's kind of expected that this is where the industry is going, even for the next couple of years, because of the new vessels being delivered. Carriers are going to have to take, very deliberate steps to manage capacity. But there'll probably be periods of, very low rates, and those will. But I don't think those will be sustained and kind of loss-making rates, but certainly lower year on year. The other wild card in terms of capacity, of course, is the Red Sea, and there are increasing signs that carriers are getting ready to go back through the Suez Canal, as you said earlier. And when that happens, that will ultimately have an impact on capacity, all that extra capacity that's been used to divert around the south of Africa will be released back into the market, and that will put additional downward pressure on rates or increase the challenge of overcapacity. And before that, though, there's going to be a period of really bad congestion because all these vessels are going to be arriving kind of at the same time, kind of double the amount of volume, weekly volumes than ports in Europe are expecting or meant to handle. And that will cause a lot of congestion that will absorb capacity that will push rates up. And even not on Asia, Europe, or Europe related lanes, even though transatlantic we could expect, but even on Trans-Pacific, we might see an impact because eventually there'll be equipment shortages in the Far East, or just delays or congestion, which even if it's not relevant to your specific lane, could have knock-on effects to the Trans-Pacific. So those are the kind of the wild cards for the year. What will happen with the trade war? When is the Red Sea going to reopen? If it happens during a higher demand time, it will be more disruptive than if it happens kind of in the lull post Lunar New Year pre peak season. And the other one, which is the big factor but not unexpected, is this continued capacity growth.
Awesome. All right. Well, thanks for that, Judah. I'll keep everybody posted about curling, of course. Yeah, hoping everybody has a quiet New Year, easy build up to Lunar New Year. We'll be back next year with more Container Bytes.